Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in corporate filings, and today we have a doozy. It looks like AGENUS Incorporated is going through some major shifts, and we are going to break down exactly what that means for them and for us. Ever wondered what a company does when it is facing tough times but also has big hopes? Stick around, because this filing lays it all out before we dive in. If you like getting the real story behind companies without all the corporate jargon, do us a favor and hit that subscribe button. And hey, we've got a fantastic community growing on Discord, so make sure to join us there too, link in the description. Alright, let's get into it. This is AGENUS Incorporated's quarterly report covering the period up to the 30th of September 2025. Think of it as a snapshot of how the company is doing financially right now and where it might be heading. Right off the bat, looking at the balance sheet, one of the first things that jumps out is their cash. They had about $3.5 million in cash and cash equivalents on the 30th of September 2025. Now, for a company in the biotech space trying to develop new drugs, that amount could be a tight squeeze going forward. Compare that to December 2024, where they had over 40 million. That is a huge drop, and it tells us they are definitely feeling the pressure to find more money. Then we see something really interesting. Assets held for sale, showing over $122 million. This means they are planning to sell off a big chunk of their business. It is a massive number compared to zero in December 2024. Typically, companies do this when they need cash quickly or want to focus on their core operations. Given their cash situation, this move makes a lot of sense as a way to bring in much needed funds. Now, this is a fascinating development. They have an equity method investment in MiNK Therapeutics Inc., valued at over $30 million. Remember, just a short while ago, they were actually running MiNK, but something changed, and now AGENUS Inc. doesn't have full control anymore. This means they are accounting for it differently, like an investment rather than a part of their own company. This is a big strategic shift, likely to free up resources, all because MiNK is now on its own journey. Let's move over to how much money they are actually making or losing. Their non-cash royalty revenue related to the sale of future royalties is a huge number, over $77 million for the 9 months ending in 2025. This isn't cash coming in right now, but a recognition of past deals. It is like booking future earnings on paper today. But it is important to remember that this is not money in the bank. And here it is, a massive gain from deconsolidation of MiNK Therapeutics Inc. of over $100 million. This is a direct result of them no longer fully controlling MiNK. While it looks like a massive profit, it is mostly an accounting gain from separating MiNK. It shows how much value they had tied up in that relationship and how much of a financial impact the change is. On the expense side, their research and development costs have gone down substantially. For the 9 months ending in 2025, they spent about $71 million compared to over $121 million in the same period in 2024. This 41% drop is significant. It suggests they are cutting back on how much they invest in new drug development, likely to conserve cash. This is a classic move when a company needs to tighten its belt, and their interest expense net has also fallen dramatically from nearly $97 million in the first 9 months of 2024 to about $39 million in 2025. This is good news, as it means less money is going towards paying off debt or the financing costs associated with their past deals, like those royalty agreements. It shows they are managing their debt burden more effectively, or perhaps some of those big royalty deals are paying down. Now, let's look at the ownership side. It is a bit complex, but the total stockholders deficit is a huge negative number, over $280 million. This basically means that if you were to sell all of the company's assets and pay off all its debts, there would be nothing left for its shareholders. In fact, there would be a shortfall. This indicates the company has a lot of accumulated losses over time. It's a sign of a company that's investing heavily in growth, but hasn't yet reached profitability. Looking at cash flow, net cash used in operating activities is down significantly. They used about $60 million to run their operations in the first 9 months of 2025, a big improvement from the nearly $130 million they used in the same period of 2024. This is a positive sign showing they are improving their operational efficiency and burning cash at a slower rate. On the financing side, they've brought in over $21 million from proceeds from the issuance of long-term debt net. This means they are borrowing more money to keep things going. It's a sign that they still need external funding to operate. Even with all these adjustments, their net decrease in cash, cash equivalents, and restricted cash is still a bit over $38 million. So, despite some positive steps, they are still burning through cash overall. This section really hits home the challenge they are facing. They're upfront about the fact that they have significant losses and that their cash resources are limited. They mention they need additional funding and are in discussions to get it. Importantly, they state substantial doubt continues to exist about our ability to continue as a going concern for a period of 1 year. This is a big deal. It means accountants aren't 100% sure the company will be around to operate normally over the next year without significant successful fundraising. They are counting on future deals and partnerships to keep the lights on, and if those don't come through, it could be a real problem. Remember that deconsolidation of Mink. This note explains it. They lost control in July 2025 and had to take Mink off their main financial statements. This resulted in a big accounting gain, but it doesn't mean new cash magically appeared. It is more about cleaning up the balance sheet when a relationship changes. Here is a look at their debt. They owe about $35.6 million. A significant chunk of that, over $10 million, is due in June 2026. This is a ticking clock for them to either repay it or refinance it, which will be tough if they don't secure that additional funding we heard about. This is where we see that big asset sale come into play. They've agreed to sell their manufacturing operations to Zydus. This deal is expected to bring in $75 million up front, with the possibility of another $50 million later. It tells us they are strategically streamlining their business, getting rid of parts that might be draining cash or aren't their core focus to raise capital for their main drug development projects. This deal is a major one, and its closure in early 2026 is crucial for their financial health. Now, for some legal drama, to raise a securities class action lawsuit, alleging false and misleading statements about their drug prospects. They have also been served with derivative actions from shareholders. Plus, the SEC is looking into certain matters. They frankly admit they can't estimate potential losses from these. This highlights a significant risk. When a company is facing financial strain and potential setbacks with its key products, investors often get litigious. This will be a costly distraction, win or lose. The risk factors section basically says, if you thought you saw all the risks before, well, guess what, we have more. They are reiterating that the challenges outlined in their previous annual report still stand. This includes the inherent risks of drug development, regulatory hurdles, and their ongoing need for significant funding. It's a heavy reminder that the path ahead is far from smooth. It's good to see that in this particular quarter, there were no new trading plans set up or cancelled by their executives. This means no insider seems to be making major bets on stock sales right now, which in this situation is probably a good sign. On a personnel note, their principal accounting officer, Christine M. Claskin, who has been with the company for nearly 30 years, is retiring at the end of 2025. While she will stay on as a consultant, it marks the end of an era for someone who has seen the company through many of its ups and downs. Leadership changes like this, especially in finance, can sometimes signal shifts in strategy or reflect the company's current situation. Here is some important post-quarter news. They took out a $10 million promissory note with Zydus. Importantly, if the big manufacturing sale to Zydus goes through, this loan gets forgiven. This is likely structured to help bridge any gap between now and the closing of that sale, making it a bit of a temporary lifeline. So, what is my take on all of this? AGENUS Incorporated is in a very tough spot, but they are also making some bold moves. The sale of their manufacturing assets is a necessary step to generate cash and focus on their core drug development. The deconsolidation of Mink also frees up resources and clarifies their financial picture, even if it results in accounting adjustments. However, the substantial doubt about their ability to continue as a going concern is a flashing red light. They desperately need to secure additional funding, and their future hinges on the successful completion of these deals and future financing. The current legal challenges add another layer of uncertainty. It's a high-stakes game of survival and strategic pivot for AGENUS Incorporated right now. They are clearly betting big on their core drug pipeline, specifically botensilimab and balstilimab, and if those succeed, they might just pull through, but the risks are incredibly high. Alright, that is our breakdown of AGENUS Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.